And doing great. We got a wild session ahead of us, a super exciting session where you are going to learn a lot and it's going to help change and adjust your perspective. Hope you all had a great weekend, are ready to dig in. Bitcoin currently trading at $97,000, $97,725. Equity markets under pressure. Bitcoin and crypto under pressure. The only standout, a couple of things are standout. Hang Seng is up 3.5%, but more importantly, we're seeing oil bid and we're seeing gold and silver bid, likely on the Chinese reaccumulation of gold. If we get a chance, we'll talk about that a little later in the session. But we got what is like an old school CTM heads down work session ahead of us. So that's what we're going to start with and get into. This is making the rounds over here. Someone, I had bookmarked this, I guess last week, says December 8th, and yesterday. And then someone even messaging me it. And Bitcoin on the 1 month will tell you the end of each market top. When the RSI is greater than 90 on the 1 month time frame, get the freak out. I don't know, don't trust, verify. Let's take a look at what that looks like here on the Bitcoin, jumping in and looking at Bitcoin, adding in the 90 RSI on the monthly and a couple of things, right? So, I mean, when it's above 90 getting out, we'll forget this cycle, the hot hype cycle, right? I mean, we don't need to include that. Bitcoin was very hard to get at that point outside of mining. Outside of Mt. Gox. We'll just let that go. And then we'll start over here in April 2013. For March 2013, Bitcoin makes it above 90. It's trading at $94. It seems a little early. Price obviously going up more than 10x, trading as high as $1,300. Fast forward, take a look at August 2017. Bitcoin peaking above 90, closing above 90. Price is at $4,000 a Bitcoin, peaking out above 19,000 Bitcoin the end of the year. And then this was a good exit, I suppose. So it was 2 out of 3. 1 out of 3 is something. Over here in March 2021, Bitcoin breaks above the 90. Oh, childhood best friend texted me. You think we're overheated? Bitcoin is at 90. And then you could see, well, that wasn't the cycle top. We had then the mid-cycle dip, price making another all-time high later in that year in November 2021, peaking out, and then ultimately peaking out for the cycle before the halving over here. But we did have a big bear market in between, so we'll just take a look at these. It seems early. It seems very early for me to be looking at any type of. It looks like it was updated. This is originally posted in 2021, in October 2021. So it was after the March RSI above 90. And they say, well, you know what? You can scale out after the RSI exceeds 90 and you'll be golden. And again, I think that's a little early to be scaling out over here when you begin scaling out at 100 and price peaks at 13. I think it's a little early to scale out over here. Is this one with the RSI? RSI over here. I'm sorry, I was wrong about that. RSI or $3,000. RSI closes above 90 in July 2017. $3,000 seems a little bit early to begin scaling out when prices peaking at $19,000. I don't like it, but I wanted to take a look at it and let you all kind of make your own decisions. But a lot of people see things and, we're here to dig in and take a look instead of just, taking things as face value. Don't trust, verify. It's what we do over here. The U.S. Treasury calling Bitcoin digital gold. The primary case for Bitcoin seems to be a store of value, aka digital gold. Absolutely massive change of posture here coming from the U.S. Treasury, as we are seeing now a very favorable administration taking the reins in this January. This is interesting over here. This is the National Center for Public Policy Research. I don't know who the National Center for Publicly Policy Research is, kind of funny, but maybe they hold some Amazon stock because they're asking for Amazon at the next shareholder meeting to consider looking at taking a 5% position of their $88 billion treasury into Bitcoin, claiming that inflation is draining its cash faster than Prime Day frenzy. I mean, we are literally seeing the pace of adoption picking up, and whether or not it's going to be something like Microsoft this week, I believe, votes on whether or not. Is that true? Are we seeing the board of Microsoft? Is it the 11th? The board of Microsoft votes on whether or not they're going to take a Bitcoin position. I don't think they will, but they're talking about it. It's at a board meeting, and who knows? Maybe we have a happy surprise. I think Zuck is going to be one of the first ones on the bid. Pure speculation, but the guy is eating a lot of steak and he's doing a lot of like Bitcoin things. We'll find out if that's right. And then we, of course, see now pressure being put on Amazon. To me, it's a question of not if, but when we begin to see public companies, tech giants with roughly between $7 and $100 billion begin to take Bitcoin positions. And we're seeing retail continue here. Retail is irrelevant this cycle. Don't forget it. They will be speculating outside in the altcoin market. So you will see lots of frenzies occur, specifically and more so the price that Bitcoin rises. It's going to be the rising tide that lifts all boats. Riot is looking to raise $500 million for Bitcoin. Yep, that is retail at this particular moment. And we continue to see almost each and every day more and more dominoes fall of that adoption taking place. I just wanted to make a quick comment on this as El Salvador, the headline is, softens its Bitcoin stance for the IMF funding. Now, in order to secure a $1.3 billion loan from the IMF, El Salvador is willing to bend the knee and not make Bitcoin transactions mandatory. If you go to the McDonald's right now, you have to be able to accept Bitcoin. They're willing to forego that, make it optional in order to get the money. I don't know if that's good, bad. I'm good, bad, or indifferent on it. I really don't think that it's much of a big deal. Berkeley bending the knee to remove the legal status. Not surprised if it's true. I don't think it's a big. Did you see that they found a bunch of gold underground? This comes after reports just a week earlier that China found an enormous gold pocket reserve under the ground. Now El Salvador as well. And I think that they basically want some money to go ahead. This is pure speculation, and build out that infrastructure needed in order to go ahead and mine the stuff to dilute the supply of gold further and profit with fiat and then continue stacking Bitcoin. Yes, Riot is retail. No, it's not that Riot is retail. It's $500 million buys are retail this round. I've talked about, we're seeing 2 million here, 20 million, 5 million. I mean, of course, 500 million is on the upper end of retail buys, but retail is irrelevant when you're having these public companies and funds. And then, of course, in the spot ETFs, over $30 billion coming in. So, in relation to that, yeah, that's like tongue in cheek. That's like CTM, like having fun. And that's the retail of this cycle as we hit early majority. A lot of people have been wondering as Bitcoin's trading at $100,000. Whereas retail, we can't have a bull market without Google Trends showing that Bitcoin search for Bitcoins are rising. Well, you know what? Go back 8 years ago, not many people were familiar with Bitcoin. So people would be just searching and learning. Today, a lot more people are familiar with Bitcoin, and they don't really need to go ahead and, because they're interested, searching into the search engine Bitcoin to find out what it is. It's a lot different, this phase of adoption. We've passed the early adopters. We're now into the early majorities. CTM. All right. And then we have over here, right, the size and frequency of MicroStrategy Bitcoin purchases have gone from the gradually phase and then the suddenly. And I wanted to just focus in on this chart with you over here. And, this is where people talk about, this is just a chart showing the purchases of MicroStrategy's Bitcoin holdings. And I'm trying to make the analogy of what people look at on a chart of Bitcoin and they're like diminishing returns. And I'm like, I don't know anything about that. This looks like S-curve adoption, and we're now jumping the chasm into ultimate market opportunity. Now, I don't think that this is going to match the MicroStrategy chart. It could. If we saw hyper Bitcoinization, we would then go like that. I don't think that's going to happen. Who knows? But what I'm pointing out is people looking at, diminishing returns. And I wonder, are they about to get surprised? I think they're about to get surprised at some point. And then we're going to, obviously hit that ultimate market opportunity. And of course, if we were to hit that hyper Bitcoinization, we would continue to scroll up. I think so. It's a good question. A lot of leverage building into MicroStrategy, and it looks like next year in 2025, a lot more leverage is going to get into MicroStrategy. And if you look at and this is something great for us to look at this week, if we look at Bitcoin scaled to MicroStrategy price, and we could see it's very normal for MicroStrategy in this bull market to have multiple 30% drawdowns. I wonder as they continue to lever up, if we'll start to see greater drawdowns going forward. And Bitcoin is only, don't forget, had one 30% drawdown this cycle into July. The rest were 22%. So it would not be abnormal for Bitcoin to have a greater drawdown than that over the next 4 years. I imagine it will at one point or another. And of course, we never know what's going to happen going forward. We're going to try to take a look at a market review this week as well, and just take a look and check in again on stock market and our expectations as we enter into 2025. But I think that, ultimately this probably ends a little bit different than people expect, or not than people expect. A lot of people are very cautious about that. I think that's very healthy and good. Other people look at Saylor and they're just like, oh, I don't think that's healthy. And also, don't forget, there's a real thing called Bitcoin derangement syndrome. Max Kaiser was the one who coined that phrase, Bitcoin derangement syndrome. We saw Saylor talking about how he feels the U.S. should sell their gold reserve. They hold the greatest gold stack in the world. He wants them to sell it in order to buy Bitcoin. I think now we are entering, they could just print the money and buy the Bitcoin. Print or go burr. You could print at will. Why would you sell your gold holdings? Especially and specifically when you're looking at this multipolar world developing, and you have all of these countries that are looking for the BRICS system, and they're looking for gold to back their trade. Selling your gold seems a little delusional in my perspective. And I don't know, maybe I'm the delusional one here. Maybe Michael's right, but I don't think so. I think that's a bit of a warning from my own idea that you know what, be careful. Bitcoin derangement system is a real thing, and we'll see what happens. I would not be surprised. Look, if we're all looking here, then maybe it's not going to happen, because people weren't looking at FTX and thinking these guys are selling Bitcoin they don't have. This is an enormous fraud, and it's going to take down the price of Bitcoin. It suppressed the price of Bitcoin, and now it's going to take, we didn't know until afterwards. Likely in the near future, it just creates more volatility and a bumpy ride. But ultimately, who knows? And I think that is something to be concerned about. And I think it's good to be concerned about all potential risks, because you never know what they might be. We are looking at the Bitcoin ETF flows now tracking somewhere around $32 billion, $33 billion. And we are seeing, again, that same chart over there. It wasn't, and it's beautiful to see. Monthly returns over here. We have seen every other prior time. September, October, and November were green. December was a green month. Let's keep the streak alive here this year. As we're seeing Bitcoin in correction, though, and as we're seeing also stocks in correction today, I just have to pull up this chart with you. And this is looking at the seasonals from December 1st through January 31st. And if you do notice right there where we are right now on December 9th, the 9th through the 15th over there does seem to be a bit of a caution where you see a little bit of a, well, very minor correction. This is going from 1928 for the last 98 years, 95 years, whatever, until today. And towards the Santa Claus rally is called the Santa Claus rally because as we get towards December 20th over there, from then on in into the end of the year, it has been usually, obviously, anything could happen anytime. So is Bitcoin and the equity markets correcting potentially because of just seasonalities? Or is it because, as you might or might not know, China has done a probe into NVIDIA about some monopoly concerns? I don't want to go over here, but we'll just go here really quick. Really interesting. This is the chart we've been looking at NVIDIA, and two observations that I want to make. And the first is, look how we came in. This was, if we break down here, we were like, watch out. We broke down as price was trading into support. We put the green line of support in. We said we very rarely look at horizontal, but we're into that support right now. And then we bounced. And then we said what? We said we need to get above this line to nullify that breakdown. Look at that. We've tested perfectly, perfectly 2 touches into the resistance. And now we already had the 1 touch clone line over here. And that's where we peaked into down so far today. Very interesting, very interesting. And that's just a testimony to, oh, you guys can't see any of that. Beautiful. Beautiful, beautiful. We need to have a little bit of that classic CTM flavor going on. So I was pointing out over here, we were looking at this and we said if we break down from here, that would be a sell impulse triggering. We broke down together live when price was right here at about 132. We added the green line, the horizontal support. We said we're into support, and we don't normally look at horizontal support, but it's worthy of noting. That wound up being so far the low. And then we said for this breakdown to be invalidated, we need to get above the breakdown, the sell impulse line. Pretty interesting that we've had 2 touches into it. It's held as resistance so far. And then you could see off of the Chinese news coming back down. We had the 1 touch clone trend line, and that's where price so far bottomed out today. Super interesting, fantastic TA in real time, because that's what we want to do. We want to continue learning each and every day, and you can see it being illustrated here. Now, I know that we focus on the mechanicals, but nevertheless, we want to be the best at everything. If we break down over here, if we close below this red line, then likely, high probability, we're coming in to test that support once again, a breakdown from there, and then likely we're seeing a bigger correction in the markets that goes counter trend to what we're seeing with seasonalities, but you never know. Why we're here, and so I could get into the good stuff, let me just blow through this in like 45 seconds so everyone could see. We have the dollar breaking down that sell impulse, coming into a line of support and breaking down. It looks like it is wedging to me. It looks like it's wedging to me. Nevertheless, since we've broke down, I don't have any type of resumption. It would look something like that to nullify it. Just kind of letting this play out, giving it time. From another view, same thing over there. We've held the yellow line of support. It looks like we're wedging right now on the dollar. Suggests that we could have a potential another leg up. Jumping in on the 10-year. This was sell. This was cover. And now we're just waiting and watching. So far, this support is holding. Look at that. Support is holding. But as Ace noted in the beginning of the stream, this week we have inflation data. We have CPI. And then on Wednesday. And then, of course, we got next week, Jay Powell. Right now, the markets are pricing in almost a 90% chance of another cut coming on the 18th. That might help send off a Santa Claus rally or not. I mean, it depends what the verbiage is and what Powell's posture is about what type of cuts are to come afterwards. So that's a little bit of a curveball the markets may be looking towards. And then over here, we have our positioning on our stocks on the daily. TQQQ is currently holding a position 5% into profit. NVIDIA's out the sidelines, roaring in the bliss as NVIDIA here is correcting. We just looked at that structure. And then we're looking at FNGU, holding a nice position, 34% into profit. Yes, crypto style gains made on stocks on the daily time frame. Here's Tesla over here holding also a 32% position, open in profit, and we love to see it. Question is, this is coming up. I think if they do cut, a 90% chance as of today they cut, that we are soon then after going to see the reverse repo drained. It was after the first cut came into the market that since then we've seen a big move down from roughly 400 billion, now down to 130 billion. Gold, just really quickly checking in today as the headline is China resumes bullion buying, likely why we're seeing silver on the bid today as well. Let me jump down to a smaller time frame. And I mean, just really quick, we from the breakout, we held this all the way. And then right over here, we said, all right, that hit our first target. I don't think it's stopping there. But if we're going to see a correction, this would be the earliest it would happen. We then had a sell impulse. You could see that this is the TA. You could see the sell impulse, the retest, resume down. As it came into the support, we said that's likely a place to take some off. We hit in a double black diamond. That's this purple line over here. That entered the entry. When it came into the conservative line, we said, okay, that's probably a good place to take a little off, see what happens. Since then, we've broke out, retested, and now we're just consolidating. What I'm watching is this. If we break below this line, that would suggest further sell pressure. But right now, we've had the double black diamond take a little off. It led to the next entry, conservative. That's still currently in play. And you know what? Let's see what the gold's going to key off what happens next with Powell. My one concern for gold, I think that gold is personally in a secular bull market after the breakout, the massive breakout from the cup and handle that took quite a while to play out. The left cup starting in 2011 and then finally breaking out 13 years later. I personally think that if the U.S. is able to, as we're seeing risk at all-time highs, Fed pivoting and cutting, there's a chance that if inflation were to actually tick up next year, not just to move up, that Powell and the Fed might have to return towards actually raising rates. That could obviously be a little bit of a trouble for everything. Now, there's also the possibility that actually we just saw a minor tick up. The trend is further down on inflation. Sometime next year, Powell's going to get to really claim victory as we get closer to 2%, if possible, and also further cuts coming in and deregulation and the Trump administration trying to actually foster growth. That's the one concern for gold in the near term. If we see a strong return to growth, then all of a sudden, I think there's much more attractive investments than gold. I didn't mean to get off on that tangent. We got off on that tangent. Now we could get into the stuff. All right, everyone, let's get back into it and make sure that we got our heads down. Bitcoin here, taking stop loss on BTC 107 on the right over here. This morning, it was close to exiting at the signal period. It was about 0.1% into profit. It held on to the trade as Bitcoin began rising a little bit and then took a stop loss over here, 1.8% out of the market on the signal period. And right over here, people are like, I don't know. I feel like we're in this channel. I was thinking about the algo that CTM uses, and it's hard to get whipped in and out of the market. We're taking trades at resistance because it's momentum-based program. I totally get that. I get that. I said that. I'm not going to say it doesn't work because I've seen the back testing you do on CTM. What I'm saying that it's taxing, and I've not proven it to myself. I look at the charts like the one above, and I think to myself, why are we not buying the bottom of the channel, right? Like buying the bottom, selling the top. You don't know it's the top of the channel yet, right? Buying the bottom, selling the top, except off the top over here, Bitcoin just hit 104, $104,000, and you're probably thinking it's going much higher, and then it spikes down over here. And if you were doing that, I would think that's probably not the best channel. But anyway, point taken. So look, the thing is that most people that have been with CTM, over 70% of the community have been with CTM since 2020, which means in March 2022, the majority of CTM is what built these mechanical systems. They understand it. When you're talking about 2.5 years of forward testing, and not only that, I love the awareness here is pretty strong. You're saying I haven't proven it to myself. And how important is that aspect? That takes some time. That takes going over this, what you're looking at right now, and then comparing the results. And I love saying right now that it's taxing. Bitcoin over here has been in and out, in and out, in and out. So we're going to do, this all started because of Ethereum. And we'll get to Ethereum in just a little bit. And this all started because of taking a look at Ethereum. And now we wound up going a lot further. And we're going to be taking a look here. This is really awesome stuff over here. We're going to be taking a look at CTM 2.0, forward testing 2.5 years. BTC 107 and 108. BTC 107 is the top CTM X template, right? Built on top of 2.0. And 108 is the top template. I defer towards 107. The stop loss on the buy side is 2.65%. The stop loss on the buy side here is 13%. Keep that in mind as we go forward. Then we have buy side only. So we'll review that when we look at the buy side only of these three. And then we have the CTM bull runs. So let's start and take a look. Put your head down, learn something, and let's get into it. And this is all, so, and this, I mean, it's so true. This is coming from the perspective of someone who must be just starting with us and hasn't yet known. And I really want to take a look at, like, also helping, like, show it to you. Michelle, you've traded through, that was my phone. You've traded through multiple periods of all the mechanical strategies. So you have an enormous edge over everyone, as most in CTM do, but not everyone. So let's go ahead and take a look at this. And this is going to help a lot of people also kind of figure out how they want to execute. So I'm starting off over here and I'm looking at the returns from 2014 to present, right? 2012, 2013. 2013, the returns are spectacular here. 2012, Bitcoin was trading at a very, very low number, obviously not on exchanges. And just one thing to point out as we start looking also from 2020 to present, when you see the compounded annual growth rate, it's showing 25%. That's because what this is doing here is taking since 2010 to get that number. The actual number of what the growth would be this. And it is the compounded cigar of the investment is approximately 75%. So just 1 second over there. Yes, 70. So that's off as we look at that. But the max drawdown, and we could go ahead and look at this. We could say this is the drawdown of 18%. Oh, sorry about that. The drawdown of 15.47% versus TradingViews of 15.93. You could see the overall return, 3,700 versus 3,700, right? There's a small, tiny difference in the calculation. Over here, the drawdown of 18.4, 18.85. The overall return, 27.36 plus 26.87. So you can see that, like, it's a tiny bit off, but this is perfect for us being able to work with today and illustrate what we want to do. Yeah, so let me just pause 1 second and you know, the most important thing is to learn the time of cycles, not price. Bitcoin has more time left in this cycle right along the stock markets. I personally agree with that. We took a strong look at that recently, what my expectations were, but I don't agree. as far as learning to time the cycles. And I could say that, saying that I don't know really too many other people who have continuously for this long timed these cycles as well. I don't know anyone. And I really want to get into that later in the week as regarding the stock market. And we will be getting into that over here. And we're going to be taking a look at what is potentially taking place right now. Look at that, just holding. But we'll look at all that maybe tomorrow. And I want to focus in on what we are doing today. But I don't necessarily agree with that because very few are able to time these cycles well. Very far and few between. A lot of people look at it in hindsight with a little bit of bias. Let's look over here, and we're starting from the returns of CTM 2.0. Forward tested 2.5 years. I just want you to see the overall return drawdown and compare it to what we have over here on BTC 107. You look at this on face value and you're like, oh, well, the returns of CTM 2.0 overall are much greater. And that's generally coming from this one area over here where it had in an early phase 331 versus the 194. That's how compounding really takes effect. BTC 108, we talked about the large stop loss, the 13% on the buy side. And the drawdown, this is coming from over here where in 2014, it had a 34% drawdown. You could see since in the following year, 2015, it also had a 26% drawdown. But since then, the largest drawdown has only been 20%. Very, very low. And you could see the overall returns, 19 million, clearly blowing away anything else. So what I wanted to focus in on was more of like 2020 to present instead of looking at earlier times. I think the price action that we saw from 2020 to present to today was nothing special about it. If anything, I think that price was suppressed in 2021 for multiple reasons. Maybe it was the Fed pivoting policy and beginning to taper and tighten monetary supply. Likely, where do we hear that from in real time? Or it could have been, and likely was, people like FTX selling Bitcoin they didn't have, suppressing the price of Bitcoin. Will we see that in the future? I'm sure of it. Was it the Chinese ban on mining? I don't think so. That hash rate came back online like lickety split really quick. But I do think that the price action we've seen, nothing special or normal about it. And I think that we'll continue to see some favorable price action. If you look at the return between 107 and 2.0, between these two periods, we could say that, BTC 107 has a clear advantage, right? A clear advantage. Let me go ahead and pull up all, and then we'll continue forward and work that way. So you have CTM 2.0 showing 2,600% with an 18% drawdown. You have 3,700 with a 16% drawdown. Now look at BTC 107 and 108. They've been very close in performance these last 4.5 years, right? This is buy side only, and it's relevant because we're going to look at the buy side only in a second. This is Bitcoin 2,400, 12.5% drawdown. And then this is BTC bull runs. And you can say, well, it's only holding 1,100% here and a 20% drawdown, but it's holding an open trade right now over 50% into profit. So it is buy side only, and it puts us on par with the performance seen over here. I know that's a lot. Take it all in and dig in with me because we're going to keep going. There's nothing easy about anything we do, and it's about putting the work in. Fruits will follow. Just like getting back to this thought over here, though, is why are we not during this particular moment in time, I don't know what time frame we're on here. This looks like the daily time frame. Why are we not buying support and selling end resistance? And if you look at the performance here, right, whether you're looking at back tested and or forward tested, like, let's be real with yourself, right? You're not going to be able to do something like a 70% on average compounding annual growth. Because the best of the best of the best in the world, there maybe have been 3 or 4 traders who've been able to outperform that. But when you're looking at like Renaissance Technologies, Warren Buffett, no, not even close. If you think that you're able to, off of discretionary trading, be able to, like, I could look at this channel and say, oh, it would have been more profitable to buy and sell during that area. Potentially. I don't even know what CTM did during that period. I mean, look, CTM taking a nice bit of profit over there, right? It was what was that over there? That trade was, 26% out of the market. I mean, if you were buying and selling support, didn't you sell right over here? So you're taking a very small piece of history and you're saying, I'm a little frustrated. We're kind of treading water, knowing that's what we do. Like when I say that's what we do, like our percent profitable is 44%. 44%. So really every 10 trades we take, we expect roughly 6 to stop out. And then you're looking at, the risk to reward though, with the average winning trade being 8% and the average losing trade being 1.8. All right, so I got a 4-to-1 risk to reward every trade I take. Like we're here to methodically make money in the markets and over time. And we know that actually Bitcoin is the lowest performer. What do I mean by that? If you look at Bitcoin, right, Ethereum, Cardano, Solana, right? Like out of all of them, the returns, I don't know where this is coming from. Let's take a look. This is from 2020, right? So let's put 2020 just so you can see the difference here. Right? So beautiful. And then will we see anything like the price action we saw on Ethereum in 2021? We'll be looking at that in a moment. This is Cardano. Now, mind you, is holding an open trade right now, 200% in profit. So it is going to take this return and make it look absolutely silly. Now, you could do this, we could just even do this from like 2021. We don't need to be using, or we could even do 2022. Like this is the bear market in Cardano. And you could say, okay, 593% from 2022, the bear market into the current bull, and holding an open trade 200% in profit. So now you're looking like since in the last 2.5 years doing, once this compounds and closes, insane things. And that is why we're focused on a mechanical strategy and not trading support and resistance inside a channel over the last 2 weeks. Solana, same thing over here, and so on and so forth. And just jumping back and including those different styles, and we'll talk about that in just 1 second. But I want to continue just to show a couple of things that this is all very important. And it's going to help you discern what's the best way for you to go. We were looking at from 2020, the performance of specifically CTM 2.0 versus CTMX, and they're quite close. Jordan, they're not quite close. Look at the difference. Well, they are quite close. Let me first come back in time over here and show you the overall performance when we come from 2012 to present. And you can see that actually CTM 2.0 is outperforming. Now, I want to go buy side only from this period over here. So now we're only looking at the buy side between this area. And this is potentially quite surprising. Let's look at the results. This is showing 1,100% on the buy side only versus 1,600% on the buy side only. And the drawdown here is smaller. So it's a clear win between BTC 107. As we do the same thing though, when we look at the buy side only here on BTC 108, you can see that, all right, actually clear winner is BTC 107 on buy side only up until now. However, if you add in the buy side only template over here, look, if you only trade on the buy side, this is our best template, BTC 101, it seems to me. Now I'm only looking from 2020 to present. Before we say anything further, let's just check. Let's check from 2014 till today, and we'll compare that to So 228,000, and we'll check that over here. And I want to check what that is. Yeah, I mean, by far on performance, we're looking at our buy side only template. If you're on the buy side only, being the weapon of choice. However, and also maybe the BTC bull runs. Right now, you can see Bitcoin bull run holding open trade 50% into profit. Let's take a look at what the Bitcoin bull runs is doing during that period as well. So I'm going to go ahead and jump in from 2014 till present. And it's holding a 62,000 versus 228,000 with only a 50% open position. So I would say that BTC 101 buy side only blows it away. And I guess the only difference would be if we included that hyper phase. And it's possible we see like mega inflows, hyper Bitcoinization into Bitcoin. I don't think so anytime soon, but you never know. And just to compare the two, you're looking at 1 million% now with BTC bull runs, 4.8 million plus an open trade of, we all know, 50% in profit sends that away. So it's not easy decisions to make. And then since we're here, I just need to know from the same area from 2012, what CTM 2.0 did. 1.3 million. So the old school CTM 2.0 on the buy side is the best. No, that's 4.8 million. CTM problems here, folks. I'm trying to push and find out the best. And then you could say that CTM 2.0 buy side only would be better in a hype phase than even the performance over here. And you could see, let me look at the two comparing. So we're looking at 225% in 2015 to 340. It looks like that was the main gain that sets off the performance to be different. And point being here, and I hope it really hits home, is the difference in mechanical strategy putting you on par with the best of the best means over the long run compared to what you're looking at in real time right now. Now, right now, currently people are looking at Ethereum. By the way, this is since the COVID low, the global lockdowns low, and we're seeing Ethereum outperforming Bitcoin by a pretty strong factor. And I suppose if we were to see some type of crisis, financial crisis, Bitcoin would play catch up. Maybe the two would even come back to a point of even. But outside of that, or obviously nation state FOMO, that's a big wild card to watch going forward. If the US passes a strategic Bitcoin reserve and then we kicks off nation state FOMO, I think that Bitcoin could also catch Ethereum potentially. But by the time we get to monetary policy aligning, I think Ethereum continues to run. The flows have started picking up on Ethereum finally. It's only recently, or ever since actually we found out that Gary is gone or going to be gone after the Trump election. And then you've seen a lot of all of a sudden funds flowing into Ethereum, into the ETFs. Now, right now, it doesn't compare with Bitcoin. It's not supposed to. I mean, Bitcoin is the rising tide that lifts all boats. We're looking here at the seasonalities of Ethereum coming into the end of the year, and it's kind of a coin flip. There's really no pattern to make of, because sometimes you have obviously a red December, green November. You could have a green November and then a red December. So there's nothing to suggest any type of seasonalities here that like Bitcoin that could help us. Would be nice to see if we got a repeat of 2021. Ethereum returns into 2025, 2020. Ethereum doing some nice, beautiful things, but that was actually Bitcoin breaking out into the bull market with monetary policy aligned. I don't think we're there yet, personally. And I don't even think, as Bitcoin is trading at $100,000, I personally don't think that the bull of all bulls is even really running. Now, if we see nation state FOMO begin, that's something that could really set it off. If you get the US government putting in a bid of 200,000 Bitcoin a year, that's going to give the ability for Sailor and MicroStrategy to continue raising money and bidding up corn. And then you would see, we saw Brazil already talking about a strategic reserve. You would see other countries then also having no choice but to follow suit. And I think that could get the bull of all bulls really, really running. All of that we're seeing right now with Bitcoin trading at 100,000, I think, is mostly adoption continuing to take place on Unfold. It's so hard. I'm gonna favorite that comment and come back to it as we look at what's going on with Ethereum, and then come back to it because we have some major CTM problems. Too many good options is a real thing. So Crowstar has something else over here. Let me. We got some seasonalities over here, huh? That's a little bit more helpful. Pointing out June is a bad month for Ethereum and the summer overall. I would say you have a couple of July and August that could be good. Let's move over. I will start incorporating some TA as we do with Bitcoin and looking at where we have our structural support. I'm going to go ahead and get rid of this lower green line over here because we don't need that on the chart anymore. I'm going to extend this out over here to the right now, and I'll make it less bold. We'll keep that on the chart because that horizontal support continues to hold. It was after the breakout, right? It's been retested a couple of times. That's a very important level. I could get rid of this over here now. And then why I have this structure, and you might not be able to see it, what I'm doing with the structure here is this bolded line, and I have the channels over here. That structure, that's for sure. However, I think we also have this structure taking place, and I'm going to go ahead and just borrow this line for 1 second, and I'm going to go ahead and extend that up to the right. I mean, look at the 2 wicks into it. I'm coming off of this low over here, that wick low. That's where we just topped out. I'll work with that in the sessions ahead and begin including that structure for us right now. Right now, Ethereum, though, at the psychological whole number, though, at that horizontal resistance above it, you know, we're going to see very quickly right around the 5,000. We don't have any type of resistance coming in to close to there, but I need to know where that one will be. Yeah, 5,000 would come rather quickly. So we'll look at that more in the sessions ahead. And then I wanted to jump over and take a look at this. So we know that this last trade on CTM 2.0 is currently still active, holding a 46% open position, and that CTMX did not participate. Lining them up since 2017, looking at the total return, we could see that CTMX 103A is a clear winner, right? As far as overall drawdown, 20% instead of 30%. Overall return, looking at almost 800,000 instead of 412. However, we got this massive 50% position open right now. And when that closes, CTMX will still be winning on drawdown. It won't be winning on return anymore. That's interesting. I wanted to look at the buy side only between these two. So I'm sorry, that was the buy side only. I regress. I'm going to add the short side now then. So that's the buy side only between the two. So in a straight up comparison, after this trade closes, it looks like they are neck and neck However, the drawdown here is significantly lower, significantly lower. Now, I could also say, well, since 2018, we haven't seen any high drawdowns on buy side only on CTM 2.0. So pretty strong and good performance between the two of them. X has the advantage on drawdown and the return kind of neck and neck. I'm going to add in the short side to both, and we'll take a look at what that looks like. So on the short side, we see with the short added, the drawdown coming down to 23% and the return to 5 million on CTMX. We see the drawdown actually still a little lower, 21%, and the return is significantly greater. So, I mean, in reviewing that, I guess my takeaway is this. BTC 103A is superior. It's superior on the buy side only in the aspect of drawdown. On the buy and sell side, they don't compare. The buy side on Ethereum here on CTM 2.0 is very close to the performance, except the drawdown is much higher. And you could look at this one trade that's open, and it's kind of like looking at the channel and saying, well, if I was doing this here, except that's a very small period of time, and this is just one individual trade. It's not nice seeing a trade open 46% into profit and missing that trade at all, but we're here for the long term and to be able to make calculated returns over the long term. I think there's nothing wrong with doing allocation. Like I'm trading Ethereum, on the buy side. Obviously, you don't want to use the sell side of CTM 2.0. The buy side, look at the difference. This is sell side only now. And there's one thing I didn't include for Bitcoin that I will next. So on the sell side on Ethereum, you're looking at a 16% drawdown, 1,100%. I mean, it's really good versus 14% and 1,200. Guys, they're the same thing. I mean, that's really insanely good for the sell side. So I digress. I digress. I mean, it's really tough decisions to make. I thought personally, because on Bitcoin, and I guess we need to look at the sell side really quick. I'm so sorry. This is also important. And I want to look at the sell side between these two and the sell side alone between CTM 2.0 and BTC 107. You're looking at 492 on the sell side with a 25% drawdown. And then there you go. I mean, it's very good. The drawdown is just simply much better on the BTC 107. CTM 2.0, I mean, forward testing now with untouched 2.5 years is an absolute beast. It was immensely great. And it is the foundation for everything. It's very hard to make those decisions. By the way, the one thing I didn't look at when looking at the overall performance of all of these, and we looked at the total of the Bitcoin bull runs, and I'm like, it's 4.8 million with a 50% open position. One thing to consider is if you are trading that and then you were to use, they won't conflict, like when Bitcoin bull runs are out of the market, if you were using the sell side to go ahead and just, take those longer positions with Bitcoin bull runs, and then you're using that to compound with the returns on the Bitcoin bull runs. I mean, it's hard not to make that your weapon of choice as well. It's hard to discern what is the best way to attack when you're looking at all of these options, which are all, I mean, ideally, I suppose the best thing would be if you could run full automation and then smooth everything out by running an allocation to each one of them, because they're all that good. But regardless of the one that you choose, whether you're buy side only, right? Whether you're trading the buy and sell side, whether you're going for the Bitcoin bull runs, understanding what the average return is here versus what the best of the best investors are able to do, and realizing that Bitcoin is it's super consistent, but it's the lowest returns out of everything we trade. I think that should really help paint a clear picture of why we're not looking at this channel over the last 2 weeks and looking to buy, and because we're here for the long term, and we're here to do something that so few could do. Not only outperform the markets, but on a level that is simply puts us in an absolute elite level. So there we are for today's session. I don't have all I can say is I'm extremely impressed of the magnitude of CTM 2.0 when you put it versus CTMX. It hangs in there. X has the advantage, but CTM 2.0 is so good. And the same thing over here when you're looking at CTM 2.0 versus CTMX. It's so good, CTM 2.0. And the buy side, I mean, it's hard to argue against the sell side. I think CTMX is superior personally. And I'm not looking personally for, even though I wish we caught that trade on Ethereum, I'm not really interested in one individual trade. I'm interested in the long term. So it is very difficult to make a discernment, though, about which is the best strategy. I could say that on the buy side alone, BTC 101 is a clear favorite. We looked at the performance. If you wanted for overall profit, then BTC 108. But if you're looking for drawdown and overall gain, and you're looking for consistency, there's a lot to be said for BTC 107, as well as the classic CTM 2.0. I hope that was helpful for people discerning and seeing the advantage of what it is that we work with, and looking at just really and making that side-by-side comparison to see what an immense value it is. Everyone, have a beautiful day. God bless you, and I'll see you all tomorrow.